Mr. Bodanapu, thank you so much for joining in. You are no stranger to the listed space itself, but Cyient DLM, with the strong listing that we've seen, could you give us a sense of what the future of the company looks like? I mean, your current capacity utilization at close to about a third. At peak capacity, what could your revenues be? And going forward, what is the expected growth in your revenues, presuming the industry is likely to grow at 30% as per your earlier guidance?
So obviously we're very confident about where the business stands and for a multitude of reasons, including the capabilities that we've built and the opportunity that has presented itself because of what is happening in the macro, and also with India becoming such a focused destination now for manufacturing. So taking all these into account, we're very confident where we stand. We've also built a very specialized business that's focused on low volume, highly specialized, highly complicated reliability and safety critical electronics. So our focus in these 4 or 5 areas, which is aerospace, defense, industrial and medical, along with our design capability in the parent Cyient, gives us a very, very unique positioning in the market. And therefore, we're very confident of where things stand and how we will grow going forward. Like I said previously, the market is expected to grow at 30%. We're quite confident that we'll beat that number. And that's coming from the fact that we have a great backlog, we have a great set of customers, we have a great pipeline. And also the other thing that you mentioned, where utilization is only 1/3, which means that we also, on the other side, while I spoke about the demand side, on the supply side also, we're very well positioned to execute to the demand. And the last thing I'll say is we've also put in a lot of effort on supply chain management and putting together a world-class supply chain, which is another input that goes onto the supply side of the equation. So all said and done, I think we're very confident where the business stands today.
All right, Krishna, first of all, congratulations. This is Nigel on this side. I recall a few months ago, I was quizzing you about when this IPO comes about, what is the timing, what are you looking at? Well, all those who got allotted, they'll be very, very happy because the stock is listed with a gain of more than 50%. So good on that. Now you're sounding very, very optimistic in your tone, and you're saying you'll outgrow the market as well. Given that 30% is the growth that you're estimating, for the coming year, should we assume close to around 1,100 crores in terms of revenues? Just want to clarify on that point number one. And point number two is, since you're operating at a third, and you did close to around 800 crores in the past year, at optimal levels, can you do close to around 2,400 crores? Just wanted some clarification on both these two numbers.
Thank you, and thanks for that question. Obviously, I can't comment on the immediate term and how the next year will look like. I'll just say that, look, we're very confident of beating the industry growth rates in the next few years. So I will leave it at that. Also, from a capacity perspective, absolutely. I mean, logically, with 1/3 utilization, we should go to about 3x revenue. Of course, there will be a bit of incremental capex to support that, but much of the capacity is already in place for us to deliver to at least those numbers in the next few years.
You know what's interesting, Krishna, is that your order book, as of the last reported numbers, is already 3x your current revenue. So that should suffice for you to actually go ahead and get that sort of revenue as well. What we want to know is, what's the kind of order backlog that you have in this year so far? What can we expect in the remainder of FY24?
So the order backlog that we talked about of 2,500 crores is for about the next 18 to 24 months. The order backlog, again, is enough for us to deliver a good year. Again, it wouldn't be fair to talk about the specific backlog given where we are in the quarter also. But I'll just say that the backlog is quite robust for us to support the numbers that we're confident that we will deliver going forward. Because what I want to reiterate is that where we are in the business, both from the demand side in terms of what the market wants, and also from the supply side in terms of the capabilities and competencies that we've built, we're very confident that we're very, very well positioned.
No, I understand that. And the reason why I ask you about the order book itself is that because between FY22 and FY23, we saw near doubling of your orders from 1,200 crores to 2,400 odd crores. Can we expect that momentum in FY24? What's the kind of inflow that we should be looking at?
So we are seeing a very strong inflow. I think it'll be a little bit premature to comment exactly how much the order book will build up for the year. But I'll say that we're quite confident that the pipeline, which is essentially what stands behind the order book, is very strong. The other thing I'll say is that the order book is only confirmed orders. There's also another total contract value that comes in, which is at least twice the order book. So we're quite confident that what's in the total contract value will translate into the order book, and the pipeline will flow into the total contract value, which is how the flow of how orders work. So taking all this into account, we're quite confident of having another good year from a order intake perspective, which will help the backlog, because as we're growing at these rates, it will also be important that we're growing our backlog at an accelerated pace. Otherwise, we can't sustain the growth rate. So we're quite confident looking at the whole flow from the pipeline to the total contract value to the order book or to the order backlog of how things are panning out.
Sounding confident on order inflows. We are doing the math with regard to the 30% growth. We are estimating at close to 1,100 crores. We'll wait for clarity on that, but we're just plugging in the numbers. And obviously at peak levels, you could do around 2,400 crores with minimum capex, as you told us. Let's focus then on the operating leverage that is likely to play out, because you're going to be growing at a fast clip. Margins could improve, right, from here. As of last year, you did close to 10.5%, but you had told us that around 12% is what you're looking at. What kind of a near-term and mid-term margin should we be looking at, Krishna?
Absolutely. I think there's a lot of levers for margin growth, because even last year we had a good improvement on the gross margin. Obviously, we've invested quite a bit for this growth. There is three elements that we've invested in. The first is the leadership, both on the sales side, but also on the supply chain and the management side. The second is on the technology, which is essentially the systems and processes that we've put together, which enable us to have a more robust supply chain, a more robust forecasting mechanism, etc. And the third is, of course, the capacity that we talked about, where we do have a fair amount of spare capacity right now. So taking these three things into account, the fact that we've invested quite aggressively gives us a lot of runway on the on holding our SG&A, our sales, general and other expenses constant, because we're quite confident that the growth in SG&A will be minimal going forward, just because we have a robust framework already in place, people in place, technology in place. So taking all this into account, we're quite confident about that 12 to 13% margin trajectory in the next 12 to 24 months. And again, from a longer term perspective, I would be a little bit cautious on that commentary, because there's a few other things that have to happen, especially along the design, IP, etc. So I would say, the 12, 13% in the next 12 to 24 months is a trajectory that we're looking at.
12 to 13% over the next 12 to 24 months. Krishna, finally, before we let you go, you had raised some funds for inorganic opportunities as well. So just wanted to understand, what are the areas that you're looking at? Will it be companies that are new, or will it be companies that are in the same space? By when do we hear on any of these opportunities? And your revenue mix itself, I mean, aerospace was 14% a couple of years ago, now it's 20%, whereas defense, which was 46%, has come down to about 37%. Going forward, say at an optimal level, what is the kind of revenue mix that one should expect?
I think, firstly, on the revenue mix, I'd say that's a function of the market and what it wants. I would say we're very cautious in terms of the kind of products that we make and the price point at which we make, to make sure that we both are bringing out our value proposition of low volume, high complex manufacturing, and that we're protecting our margins. So beyond that, I wouldn't worry too much about which sectors, etc., because I think we're really more focused on the quality of revenue. Because again, the fundamental thread is this is very high complexity manufacturing for very safety critical components, and therefore, there's certain elements that we bring to the table that not many companies in the world can. In terms of acquisitions, our idea is, again, to build on our competence and capability. Like we talked about, capacity is not a huge issue, but capability and competence, especially in terms of a globalized manufacturing footprint, is something that our clients want. They want some of the final manufacturing, for example, to be closer to them. They want some of the box build, etc., to be closer to them. So we are looking at those areas. I would sort of err on the side of caution in terms of timelines, because as you know, with acquisitions, things take time, and that's something that we've built a lot of competence even in the parent, and we've done some really good deals there. So we're on it. I think it'd be not very prudent to have an absolute timeline on it at this moment.